On Too Sharp with TT, ED cracks down on Anil Ambani's group and Morgan Stanley projects India to be world's number 3 economy by 2028. I'm Nisha Poddar. Let's get started. The Enforcement Directorate has launched a massive search operation across India targeting Reliance Group companies linked to Anil Ambani, referred to internally as Raga or Reliance Anil Ambani Group companies. Now, the searches are underway at over 35 premises involving more than 50 companies and even 25 individuals unnamed. Now, these are being conducted under Section 17 of the Prevention of Money Laundering Act. Now, what triggered this is the big question. The case stems from 2 FIRs registered by the CBI along with new inputs from a wide range of agencies which include SEBI, National Housing Bank, NFRA, Bank of Baroda and the others. At the heart of this probe is a well-planned scheme, as the ED puts it, to divert and siphon off public money. An alleged 3,000 crore rupees loan fraud primarily routed through Yes Bank between 2017 and 2019. Here's how it worked. According to ED, Yes Bank promoters received funds in their own group entities just before the loans were sanctioned, raising suspicions of a bribery for loans nexus. Now, credit approval memoranda were backdated and approvals were rushed through. In many cases, loans were disbursed before any formal sanction was even obtained. Now, some loans were disbursed the same day they were applied for, with zero due diligence and no credit analysis and common directors and addresses amongst the borrowers. So these were the strings. Funds were routed to shell companies, group entities, and in some cases used to evergreen other troubled loans. Now, ED is also investigating Reliance Home Finance, which significantly expanded its corporate loan book, remember, from earlier 3,700 odd crore rupees to over 8,500 crore rupees in just 1 year. The agency has flagged irregularities in approvals, policy violations, and financial misrepresentation. In ED's words, this was a scheme to cheat the banks, shareholders, investors, and even public institutions. Anil Ambani's residence has not been searched, but the trail is tightening. In its response, Reliance Infrastructure as well as Reliance Power clarified that the ED's actions have no impact on their operations or the financials. They say that the allegations relate to RCOM and RHFL, which are separate entities with no business or financial linkages to them. They also pointed out that Anil Ambani is not even part of the board of Reliance Infra or Reliance Power. Still, the markets reacted sharply and shares of both Reliance Power as well as Reliance Infrastructure dropped as much as 5% today as the news of these raids broke. From financial misconduct to future milestones, Morgan Stanley has just released a bullish forecast for the Indian economy. The big headline: India is expected to become the world's third largest economy by the year 2028, surpassing Germany to reach a GDP of $5.7 trillion. And it doesn't stop there. By 2035, India's GDP is expected to surpass $10.6 trillion, making it one of the world's most powerful economic engines. Morgan Stanley lays out 3 possible paths: bear case being $6.6 trillion by 2035, base case $8.8 trillion, and bull case of $10.3 trillion. And they believe that India is already trending towards the top end. So what's driving this? Macroeconomic stability, a booming entrepreneurial class that we are seeing, digital as well as physical infrastructure upgrades, policy-led investment push, broad-based consumption, especially remember post the income tax cuts, and importantly, a robust services export pipeline. But here's the most striking detail. 5 Indian states, including Maharashtra, Tamil Nadu, Gujarat, UP, Karnataka, are expected to become $1 trillion economies by the year 2035. Now, these states alone could rank amongst the top 20 economies globally if they were counted as individual nations. The report also highlighted 9 states already have per capita GDPs above the national average of $2,547, and these are AP, Gujarat, Haryana, Karnataka, Kerala, Maharashtra, Punjab, Tamil Nadu, Telangana. Now, Assam, Gujarat, Karnataka, and Odisha, they have outpaced India's national growth average over the past 5 years. States like Assam, Bihar, Odisha, and UP are punching above their weight when it comes to capital expenditure as a share of the GDP. But Morgan Stanley doesn't shy away from the challenges either. They flag risks like uneven infrastructure, state-level fiscal stress, also governance and capacity gaps, and external threats like the global recession or aggressive US tariff actions. Still, their base case projects 6.3% GDP growth this fiscal, rising to 6.5% next year. Now, inflation is cooling, the RBI is expected to cut rates further, and services exports remain a strong pillar of the economy. So, final thoughts. On one hand, a powerful global investor sees India racing towards a $10 trillion future led by its states, policies, and people. On the other, one of its most well-known business empires is under siege for what investigators call a blueprint of defrauding the system. With that, it's a wrap on Too Sharp with ET.